Good morning, everyone. Welcome to the European Crossover webinar. And we just got the data out. Eurozone market flash PMI came in at 54.4 versus 53. We did get data, let's see, UK retail sales, which came in just a little bit better than expected at 1.5%. That was 2 hours ago. Then we did get French market flash PMI come in line at 51. German market manufacturing flash PMI came in at 58. Good strong number versus an expected 55. As I mentioned, Eurozone market flash PMI just came out. At the bottom of the hour, we'll get UK composite flash PMI. They're expecting 53.9. And later today, we'll get building permits here in the States at 8 a.m. Eastern, followed by National Activity Index at 8:30 Eastern, and new home sales at 10 a.m. Hi, Giuseppe. Good morning, and bear with me one moment. Yeah, I'm here live now, so apologize if you couldn't hear me. My mic wasn't on, or actually wasn't connected correctly. But anyway, let's go and take a look at the euro. The euro, we did go and get bounce back, yesterday, or actually the analysis. Let me pop this up for you real quick. Taking a look at the euro. Actually, for our Asian analysis, and let me pop this into the daily. There we go. I was actually looking, but we actually made it down here to 1787. In my Asian analysis, I was looking for a low of 1794. Maybe not a low, but where I expected support. But you can see they came right to that daily level of 1787. Now they have popped back up to 1828 on that good data that we got out of the Eurozone. It's been very good data actually coming out of the flash PMIs have outperformed once again, just to recap, but we did get UK retail sales, but since then, French PMI came in line above 50, so it's above contraction. And then, of course, German came in very strong. And then Eurozone flash PMI came in very good also. We'll go in and take a look. Generally, what we'll do is, for those that are new, like Giuseppe, what we do is we go on and just take a quick look-see at Euro, Cable, Aussie, and then we take a look at the indices, and then we cover some stories. So let's go and take a look at the cable. And then we'll get into the analysis. So we saw a strong day 2 days before. As we took out those highs, we came in right into that level of 31.51. Then we backed off slightly, still keeping ourselves in a good positive momentum. And we're working just a little bit higher today. Taking a look at the Aussie dollar. We've added on to those gains here. We took a little bit of a pop, but we still finished strong or close higher yesterday. You can see we've added on to those gains here in the Aussie dollar. And lastly, we'll just take a quick look at the CAD, and then we'll do further analysis or review on the rest of those. Bear with me. And the dollar CAD just basically sucking wind here. You can see we're back down here towards this 31.12. We ran the stops a couple of days ago, sub 31, came back and tried to push higher, but we finished on our lows or towards our lows, and we've kind of pushed even lower here. Now, with that said, we'll go and take a look at where we stand on the indices. There we go. And you can see here we're actually coming up here on the Nasdaq. Now, yesterday this was the level that I was looking for us to get to. I posted that in the chat room. We did make it up, and I might have missed it by a couple of ticks, literally. But you can see they backed off, came back a little bit here, again, tried again, and of course we had our debate, and then we sold off here to this 11,600, and we're challenging this area once again. Now this is on the 30-minute. Here we are looking here at the 2-hour chart. Jury's still out. Now, what we did notice yesterday, we pointed that out, the S&Ps have actually been faring a bit better than the Nasdaq, and we saw that yesterday follow through in the U.S. session. You can see in the 30-minute, we are in a buy signal here because we're looking at the exponential moving averages. We've been in a buy signal. We came down here, but even though we dipped here, still in a buy signal, challenging here at the 34, basically about 34.59 up in here is resistance level. Take a look at the Nasdaq. Kind of a mixed bag here in the Nasdaq, and as I told you, the S&Ps performed better. We had been in a buy signal, but we actually generated a sell signal here, and we're kind of jumping right back up again. One moment. But this is mixed bagging it here in the Nasdaq. Now here's the issue on that, and I always try and give like a quick little primer, and then we can always come back here. I think the jury's still out. We pretty much know there's not going to be a deal. Now everybody keeps kind of waiting and hanging on, but even if they were to reach some kind of deal, Pelosi and the Democrats really are pushing for the 2.2 trillion. They would still have to get this passed by the Senate. McConnell says really there's only enough money there for 500 billion. Maybe they could twist some arms. Maybe they'd get 1.2 trillion. Pelosi's not going to agree to that. And what's his name? Mnuchin. I think Kudlow said it, and I think Mnuchin also mentioned was that they're still far apart on key big numbers. And I think that's the reference to aid for state and local, and which is what the Republicans are against. Same thing with Trump. So it's really just not going to get, the deal's not going to get done. Now, one of the things we talked about, although we already saw it kind of pull back already, we talked about that yesterday, and we saw that pull back down, was that when we look at the cash equities, I like to call them the big eight, sometimes people call them the Fang Man plus Tesla, is they've kind of broken down and we're no man's land. Well, we saw that sell-off yesterday. We saw that come to fruition, so it did come down here. And we're talking about yesterday, we think that if we do see a continued sell-off, we're looking for a move down here to 11,355. We did mention we have some support here around 11,500. The actual number was, at the time, was 11,486, probably like 11,495 now. But that is the anchored VWAP from the September 21st low when Trump said, forget it, no stimulus, and we sold off. So we're kind of holding up in here, but you can see that we broke that trend line. We're much weaker than we are with the S&Ps. If you look at the S&Ps, they're in a lot better shape. And that's what I was talking about, that divergence. And once we were in the U.S. Open yesterday, you were seeing people talking, oh, wow, look at the S&Ps. It's doing a lot better than the Nasdaq. Well, we had already covered that in the morning session. You can see here, we talked about how the Nasdaq was in a much weaker state. You see what I'm saying? And we showed that in the cash equities. And you saw that come to fruition here in the index. So if we were to rotate lower, we said go with it, because then we can potentially come down here. Now, we're still being held hostage with the stimulus talks, but we could end up finding ourselves for the rest of the day is they may just let them go and dip, because there's really not a deal coming. Even if a deal were to come, it's too late to get it to pass through. And now the thought is that they just won't get it done. One thought being is, one moment. One thought is also the Senate doesn't even want to have to vote on it before Election Day because they don't have the vote. So then they'd be basically saying no. So I think it's a moot point that it's not even going to happen. And that really opens the door for us to maybe just rotate lower. So you have to be careful today. We could see a sell-off. Let's go on and bring in the stories. We'll move in from there. So we like to usually hit the stories. Let's take a look here. The dollar's firm after the debate, but dragged towards weekly loss by stimulus bets. The dollar inched higher at the end of a tough week on Friday, although we know that the euro has bounced back. Having shed almost a cent against the euro and suffered its largest weekly drop against the yen in a month, as a measured U.S. presidential debate left investors in a cautious mood. The dollar grounded about 1/10 higher against a basket of currencies in the Asian session, just clear of Wednesday's 7-week low, but still leaving it down 7/10 for the week. The market reached reactions rather muted in Asian trading, but slightly tilted towards more conservative sentiment, as he's seen in a strengthened dollar index. The yen is up 7/10 for the week. The euro slipped to 18, but we're now at 18.28 on the better part of those numbers that just came out. People are just closing out longs ahead of the election just in case Biden isn't elected, said Chris Weston, head of research at Pepperstone. And you can see that a couple of days ago when we were at 1870, we're actually at 1874. Actually, I think we were actually right at 1870 a couple of days ago in the chat room. And I said, hey, look, we're at a daily level. And I think that's actually where we had our bias chart resistance. That was 2 days ago. And then it got up to 1874, kind of rolled back down a little bit. Then it got up to 78. And then we ended up working lower, and we faded since then. And we'd already had 3 solid days at the time. So it wasn't surprising to me to see them fade back, although they did fade back pretty decent amount. Persistent hope that the Congress might pass a stimulus package before the election and confidence that spending follows anyway, no matter who gets elected, has driven a sell-off in the bond market in anticipation of inflation and government borrowing. The dollar has been sold because the prospect of stimulus has supported investors' moods. A Biden victory, which polls predict, is seen as more likely to drive further dollar weakness. However, betting markets showed a small movement in Trump's favor in the immediate aftermath of the debate. Bookmaker Ladbrokes said on Twitter on Friday. Elsewhere, the New Zealand dollar edged down after a softer than expected inflation data. Sterling slipped on Thursday of uncertainty on the Brexit bubble, but it's also up 1.2% in the week. So enough of that. And the news is rather light, so there's not really a whole lot. Move over bonds. FX has taken over as the investor's new favorite playbook. A dearth of action in the fixed income markets is prompting bond investors to focus more on currencies to spot market trends, making a turning point for the gigantic but generally murky foreign exchange markets. Buying bonds at the rate of roughly $2 billion per hour in the wake of COVID, central banks have crushed volatility and reduced its efficacy as a significant or signaling instrument. While the collapse in interest rate differential should lead to a fall in currency price swings as rate changes and the relative levels are major drivers for the exchange rate, this has major implications for investors to central banks because they express their views as economic outlook of major events via the bond market. If the bond markets are broken, then the currencies provide an alternative, investors say. It's clear, it's early days, but anecdotal evidence can't talk. But from client conversations suggests they are looking at currencies as an asset class to predict market trends compared to earlier discussions that would be on what the bond markets are prediction, said Robert McCratty. With interest rate markets numbed and an environment where central bank inflation targets are becoming looser, bigger moves in currencies will be more common in the forex markets will increasingly bear the primary burden of the reflecting larger macroeconomic trades. That's why I think Bitcoin is doing so much better. I don't really understand Bitcoin myself, but I was mentioning in the chat room, look, with all these central banks looking to be borrowing and just doing all kinds of stimulus, it just makes sense that you're going to see a run-up in Bitcoin and probably also gold. Muffin's been pretty active about trading the Norwegian crown versus the dollar. He said the Norwegian bond market can be too small and relatively illiquid to express such views. The view is shared by Oliver Brand, a senior fixed income manager at HSBC. Take the euro, for example. Since the European Recovery Fund was announced on May 18th, the euro has rallied more than 10% versus the greenback, with relative bond yields barely changed, even though the news was primarily about debt mutualization, or mutualization, I should say. It's also reflected in tightly controlled markets like China, where the yuan climbed to 27-month highs. To be sure, switching from bonds to currencies is not easy. They're far more volatile than interest rates, with 1% to 2% daily swings. A common currency large by standards, but is not deterring investors from data. The Bank of America shows FX trading flows on the trading platform to currency markets is increasing, suggesting low bond market volatility is pushing more bond investors into currency markets. Interesting. So there we go. I'm going to have to save that one. I have to go and save that. So with that said, let's go and move into the analysis. See here from Amira. He says the DMA for to 10 and 50. The green is DMA. Oh, okay. The DMA roll to small market cap. Let me go back in here. Oh, okay. I see what you're saying. Okay, I'll reference that. Let me show here. Okay, let me do this for you. So I keep it simple. Okay, what I do is I don't do a whole bunch of fancy analysis. I go by the levels. You can see I have a lot of levels, and I look at a 5-hour, a 30-minute, and a 2-hour chart. Okay, now what I do use, and what you're referencing here, then is it's not a DMA. I use the exponential moving average. You can see it right here. Okay, there we go. I use the exponential moving average on the 30-minute chart, and kind of gives me I'll do it on sometimes on the 5-minute, but I'm trying to just stay with the. I'll just stay with the VWAP, but you can see here is that I use the exponential moving average, and I use a 9 and 27, and I've used this for years. And I mean, like, I think I saw I'm not going to say the name. I saw a big proprietary trading firm, and they're now using the 9 EMA. They're using it on, I think, on dailies and some intraday stuff, but they're just using the 9. I have the 927. That's something that I developed myself literally about 10 years ago when I was trading crude oil, and I actually would use it when I was looking at. I was looking at 40-minute markets or something like that. And I think 20 minutes to 40 minutes. But I came up. I did like. I'm not even a back testing kind of guy, but I kind of did a little bit of I check. And so I came up with this 927. I use the 927. You can use it on a 5-minute. You can use it on a little bit longer term, like a 2-hour. But it works really well on the 30-minute. You can see here we got the sell-off here. It stays that way. And then we get the crossover. And look how long it stays long like that. You see? And same here. And generally, although you can see the market's been choppy. So when you get a choppy market using moving averages, you're going to kind of get chopped up in here. So you have to look into that in consideration. But you can see when we broke here, as soon as we flip back to the buy signal, you can see, look, so in a situation like this, and that's why I kind of moved to the 30-minute. I've been on the 30-minute, but I'm not using it right now for the 5-minute. I think it's just too many signals because we're jumping all over the place. But that being said, you can see here is that once we generate this, it means to be on the buy side of the market, and you can see we fell, but we came back with a hammer, but we're still above. The 9 is above the 27, which states that the momentum is going that way, and you can see how the market stays that way. Now, like I said, the Nasdaq is we talked about this being weaker, and that's why I think that there's a chance that we could still maybe fade today. But we've kind of bounced back up here. We'll see what happens, but I think we have to be careful today. But I just wanted to share that. Now, as far as the VWAP, I use a same day VWAP. So here's where the market opened, and I use a 2-day VWAP, and those seem to work really well when you're trying to find where the market can move to. If we break above the VWAP, then you can generally going to find for the buying. One thing you do want to use is when you come in, if the market sells off into the VWAP, don't just immediately buy it. It's a good area to cover, although generally you'll overshoot it. But that's what I look at. Now, the only other thing I do use is I use anchored VWAP, and you can see here. Here's the anchored VWAP off of, as I told you, the September 21 lows. So you can see here, as you get down here, you have to be careful shorting. If you're short, fine, stay short. But if I scalp a lot. So if I covered in here at the time yesterday, I was saying, oh, I'm not going to trade. I'm not going to trade it. And I'm like, oh God, I should have just gone and traded. And I thought about it. I'm like, maybe I should just go and initiate a short because it's going to drop down. I'm like, wait a minute, you're close to the VWAP off of these lows. Don't be doing that. Just stay steady. Don't do it. You should have traded. You didn't. Whatever. And I'm glad I did because the market eventually turned around, never came back. And then my anchored VWAP. This anchored VWAP goes all the way back to the March lows when everything completely fell apart. Remember, that was the low of the COVID whole situation. So once again, if this would be an area, if the market really were to fall apart, I'd be looking for it to go to. But for now, I'd be looking at the anchored VWAP. Like I said, when we look at the technicals, we talked about coming down here, but the level we'd be looking for if the market breaks is 11,355. Probably get a little bit of buying here as we go past this VWAP, but I think we'll eventually go down there. So with that being said, let's go and get into the analysis. I just wanted to share that in regards to just using an exponential moving average of 9 and 27. Now let's go on into the analysis. So here's the euro dollar. We'll pull up the bias chart. Okay, so Giuseppe's new here, so let me explain about the bias chart and how I use it. Which Blake does a bias chart, and this was I ended up using the bias chart when we did when the web started here on the webinar, where it was a couple years back, maybe it's a little bit longer. But here's the deal on that. So primarily, I scalp, but I'm saying what I do is I come up with these levels, and they're levels on very short term for this day out 24 hours. Now, I don't try and suggest what the high or the low is, although quite often we'll come close. But what I'm doing is I'm looking at the levels as the market moves from level to level, and where I think we'll see demand come in. It doesn't mean it's the outright low. Like the 2 days ago, I had the bias chart at 1870. And the actual high for the day was 1878, and then we've sold off. Obviously, we even broke 18 today, but we'll go with the level. We'll say what it is. Well, all that means is that that's where I expect demand to come in or supply. Like yesterday, or I mean, day before yesterday was 1870, and we were talking about the way I came up with the 1870. You can see right here. You see here we had this daily level. So our bias chart resistance was 1870. We got a little bit above it, but you can see here that the market sold off. Now, my thought was, and we talked about that in the chat room, not in the chat room, but in the webinar, we had already had 3 solid days. So could it have gone a little bit higher? Yeah, but you had already knocked out all the shorts, and we talked about that. It might go higher towards the end of the week, but we already knocked out all the shorts, or most of them. So it made sense for the market to take a pause. Plus, remember we did some work. We were talking about the Nasdaq. We said, hey, look, you might, this may not go too much higher because there's a risk if this stimulus deal doesn't get done, we can sell off. I don't think the dollar's going to rally. I've been saying it for quite a few weeks, and I said it last week, was the dollar couldn't rally even if you shot it out of a cannon. That came to fruition, but I thought, hey, I don't think it's going to completely fall apart, only because if we don't get the stimulus deal, we will see a good sell-off, and that will provide a cushion for the dollar. Don't think it would necessarily rally, but would provide a cushion. So that's where we're at. So now let's look at the analysis for today. And this analysis is done during the Asian session. So if you were to go to basic technical, you can click on that and already have these levels already. But taking a look at it, and generally I'll stay with this analysis, although the analysis is done essentially about, let me see, about 9 hours earlier. So if we see a big move, obviously I'm going to adjust it. But I try and stick with what the analysis are because it's just based on the levels. You can see the next level. I didn't think they would necessarily make it down here, but they made it to 1787. So I put the euro after 3 prior solid closes, reverse course on Thursday. Support on Thursday will be 1794. And I meant to say, because today is actually Friday, will be 1794 with resistance at 1841. So I did mean to say this should be Friday. I don't know why I put Thursday, but I wasn't paying attention. So 1794, we kept the same support. This is support I had for Thursday, but it was also going to be the same support for Friday, although we did stop at 1787. And then the resistance on Friday is going to be 1841. The market is still bullish. So you can see here that we actually got past the 1794, but not much, by 7 pips. And now here we are rallying, and my resistance for today is 1841. The high support is 1845. Doesn't mean it's going to stop right on the button. Okay, you can see here, right there, you see that level there? So I kind of took that into consideration. That came at 1840, I said 1841. So basically I'm just going from level to level in alliance with how I think the market's trading. It's not that I haven't even been playing FX that much. I've been so more involved with indices, but I've been bullish euro. I guess I should have been playing that that way, or selling the dollar or whatever, but I just haven't. But I look at it in context as to how I think the market's trading and where I believe the levels will go to. So I've got 1841. Doesn't mean we can't push even higher, but that's where I expect. If you were playing it for the long side, you might want to lighten up at that point. Doesn't mean you necessarily want to short in there, because overall it's still bullish. That's why we have the bias is bullish. So that being said, let's go and move into the cable. And these are all short-term levels for the day. Cables had one heck of a move because we blew through doors and blew through the bias chart resistance 2 days ago. So let's go to the cable. Cable slightly paired back on Thursday. You can see that right here. Still retaining the upside momentum. Support on Friday will be 30.28. You can see we've only been as low as about, 30.50. With resistance at 31.40 in case we decide to blow a little bit higher. Not 51, but 31.40. So let's go to support. 30.28. 31.40. And you can see the bias is still bullish. Let's move on to the Aussie dollar. So the Aussie retained its upside momentum for Thursday. You can see that. Had a move, nice reversal Wednesday. Still kept it okay. Came off those lows. Resistance on Friday will be 71.51, so almost back to this level, 71.51, with support at 70.86. You can see when we pull back to 71, so not too far from it. I left the option for it to dip a little bit below that level of 70.95, but so far it's held up very well. So 70.86, and the resistance is going to be 71.51. And we just got UK manufacturing PMI. Coming across the squawk. They said a miss on services. Came a little bit weaker. Flash came in at 52.9, a little bit weaker compared to the Eurozone. The Eurozone has been doing a whole lot, heck of a lot better. So maybe the Euro pound's a little bit better. UK numbers came in a tad bit weaker here compared to what they're looking for the poll. So let's now go and move into the Kiwi. So the Kiwi on Thursday added on to Wednesday's gains. You can see that. Resistance on Friday will be 66.92. You can see here. The high so far today is 66.92. Not bad. So let's go back. Resistance on Friday will be 66.92 with support at 66.24. Okay, so let's put that. $92, and you can see we kind of turned things around, so it's going to be range is going to be bullish. And let's move into the dollar CAD. End of the week, I don't know why I said it as end of the week analysis. It wasn't. It's Asia analysis, but I clicked on the wrong thing. But anyway, that being said, dollar CAD finished on Thursday a bit weaker after pushing higher earlier in the session, because we saw that turn around Wednesday. We did push higher, look, and then we ended up finishing weaker. Resistance on Friday will be 31.88 with support at 30.85 in case we take out the lows here. We're kind of middle of the road here on the CAD. And 31.88, and it's still bearish. Let's go and move on now to the dollar peso. Boy, this thing is just weak as all get out. So the dollar peso has closed below 21 for Thursday. Support on Friday will be 20.89. So I think we may have got it to 20.89 or 20.88. Resistance will be 21.18, which that doesn't seem like that's going to happen. So we'll go to 20.89, 21.18, which doesn't seem likely that would get a turnaround there. And it's bearish. Let's go move into the dollar yen. So the dollar yen paused on Thursday following a downside swoop. We saw that, and it paused on Thursday. Support on Friday will be 427 with resistance at 510. We're kind of sitting here dead in the water in the yen. And 510. And remains bearish. Let's go to the cash dollar index. So the dollar index broke lower on Wednesday, closing below 92.68. We saw that. I don't know why it's support on Thursday, which I don't know why it didn't update for Friday. But what we're looking for was in case we did push lower. I'm trying to remember exactly what I put. I think it wasn't too far off of this. Let me go and see if I can pull up the analysis from the site. I don't know why I didn't save it. Hold on. Okay, I've got it here. It says the dollar index steadied itself on Thursday, moving back to 90 towards 93. Resistance on Friday will be 93.24 with support at 92.62. So this is what I usually do. I copy it out. There we go. And there's the analysis for today. So the dollar index steadied itself on Thursday. We saw that. Moving back towards 93. You see that. Resistance on Friday will be 93.24 with support at 92.62. And let's go on to the Kiwi. I don't know why this thing keeps popping up. Okay. Now you can see we saw a pretty good solid rebound on Thursday. So if we're going to see any further follow through, that would take us to this level right here, which is going to be 70.13 on the upside. And that might be a stretch to think it would get up there, but that's where it is. And support would actually be right there, a little bit of a confluence, which would be 69.70. It looks like we got a little bit past that. And let's go and move into the euro pound. Oh, we saw that pretty big sell-off here on Wednesday. Kind of held its own here. I would have expected a little bit lower dip, so I would have gone right here, which is 90.05. I think we had the support actually at 90, but we'll go with 90.05. And on the upside, we're just going to go with the level. You see right there, 90.56. That's actually cutting a little bit close, so we'll actually go with, you see the wick here, kind of confluences here with the open there. So it's not much higher, but it's 90.63. Definitely bearish. Go with the euro odd. Pretty good little sell-off here. And we generally, when you see a level come into a level, you usually see the stops hit. So that's not unusual for us to go beyond that. So what then I do is I look for some confluence. You see at the top of these wicks right there? So that would put us at 65.45. It looks like this. They just about went there. So 65.45 for the low. And the rebound, I wouldn't expect much of a rebound because we're so weak. So on the rebound, we can take a look at a 2-hour chart. And right there, you see right there, that right there, that close, 66.12 is where they could go to. I don't think they will, but that's where they could rebound. When we look on the daily, it's still bullish. Even on the short term, it turned bearish, but it's still overall bullish. We'll have to get below 65.81 with at least 2 consecutive daily closes to drop it back into the zone and not be bullish. Then it might, well, we probably just spend about 3 days to say we're in a range because right now it's still bullish. Take a look at the Euro Kiwi. Pretty good little pair back here. Obviously, you can see where they want to go to. Whether they get there or not, support's going to be 76.37. Upside, this close right there, right there. which is going to be 77.35. And that's no longer bullish. We'll call it range. And let's go to the ASEAN. This is still bearish, even though you might think on the short term it's kind of in a range, but it's still bearish. Support's just going to be right there at the wicks, 74.18. I do have a little bit of a range, but the upside, the bottom part of this wick, which is 74.95. And then on to the guppy. The resistance is going to be the close of this bar right there, which is 37.47. We may have already had that too. 37.47. And support right there, this wick right there, which confluences with this wick. That's going to be 36.29. And lastly, the sterling odd. Look at this, and we've dropped lower here. Let's go with the support. Support's going to be this bar here, that wick, which is 82.89. On the upside, I think we'll have a tough time even getting to 84.03. So let's look on a 2 hour and see if we see anything. Yeah, right there. See these touches? Let's go right there with 83.76. And that kind of confluences here too. So 83.76. Oh, look, nice little bounce back up here. Oh, that's on a 2 hour. On to the daily. 84.44. So we're up a little bit higher than what we were. Not much. Let's see. What was the bias chart? Oh, 18.41, and we're at 18.43. Taking a look at where we stand on the daily on some of these charts. You see Apple. We can still pull down to this trend line. We're still kind of a weakened state at this point. See here, Microsoft. So we're open, although we already tested lower yesterday. They did come off of these lows on Microsoft and Amazon. Google's still pushing higher. NVIDIA can push lower, but it came off of the lows. And Facebook is sitting here. We saw that move already. It happened yesterday. The only thing is, if we do rotate lower, we can push lower. And I think that that's the risk today. We'll see how the market wants to close. I mean, I don't think there's that much of a risk to say, oh, there's going to be a deal that will happen over the weekend. This could be one of those situations where we may trade rather stagnant for the day, and then towards the end of the day, we start to see a sell-off. So here we are on the daily. Let's take a look at it on the 2 hour chart. See where we are in the pre-market. You see they're higher. Let's put it with the 2 hour chart there. Switch Microsoft to 2 hour. They close at 214.89 to 215 and put it to 2 hour levels. See where we are. 216 is huge. Amazon closed at 31.76. Pre-market we're at 31.83, so just a little bit higher. Put up the 2-hour levels. Google closed strong at 1606. They're up to 16. They're basically not doing anything. And it generally trades quiet in after market hours. Nvidia closed at 534, coming off of those lows. And it's at 536. Put the 2-hour levels on here. Facebook closed at 278. Add a key resistance on the daily. 2-hour. Pretty much quiet. And put up the 2-hour levels. There we go. Tesla closed weak, 426. It's traded at 423. It's below a trend line too on this 2-hour. And lastly, Netflix was weaker after earnings. Lower subscriber rates, closed around 485. We are at, this is one to keep an eye on. We're at 44, so we're trading kind of quiet. Thought they may have been pushing it lower. And that's going to be it. Thanks for joining us here on the European crossover webinar. And we'll see you in the chat room. Giuseppe said XOM, please view that on that one. That is, yeah, I'll take a look at it. I don't even follow it, so I can take a look. Bear with me. This thing's in really bad shape. Look at that. We are seeing a little bit of a turnaround, but resistance is going to come in right there. We're actually at resistance. That's resistance right there. 34.87. And let's look where they are pre-market. They've jumped up to 35, so above resistance. And then when we look at it on a 2-hour chart, resistance would be right there. That would be $35.10, $35.10. There is a little bit higher right there, but right here, this $35.10, that's going to be key if we can sustain a 2-hour close above 35.10. We might be able to push up to 35.23, but it'll be key if they can sustain a 2-hour close above $35.10. So, and Amira said to look at natural gas. These are markets I don't even follow, folks. I'm not even trying to remember what the thing is for natural gas. Let me see, NG. I don't follow natural gas. I mean, I haven't seen natural gas, and I honestly haven't looked at natural gas in literally at least 7 or 8 years. I've even never traded natural gas because they call it the widow maker. Oh yeah, did see the headline. Some big firm was buying a lot of natural gas and it pushed it higher. So if you look at it, it's close to $3. Then they would fade that from $3, which apparently they are. We'll take a look at it. So 298, basically 299 is a key level. 299, and that's on a daily. Let's look at it on a weekly. And right there, you see that 297 on a weekly. That's a level right there. So, but you can see on the weekly, it's pushing up. And if you looked at it on a 2-hour chart, they actually got above 3, but they're actually below this key level, which is 298, 297. You see right there? That's a key level right there. That would be a key. That would be your pivot. 299. They have to get above it. There's more resistance here at $3 even, but this is your pivot right there, 299 right there. If they get above that, you'll spook since people get some stops, and support would come in right there, which would be 289. right here, this is all over the place here. So, I mean, you can point to this, but you can see here it's all over the place here. So it could push as low as 289. And that's all that we got. So thanks for joining us here on the European Crossover webinar. And we'll see you in the chat room.